And we've all been waiting to see how markets will react to the Federal Reserve's announcement that it will speed up its taper and consider multiple interest rate hikes next year. But that negative reaction some were expecting has yet to happen. So joining us now to discuss all the latest is Michelle Snyder, partner and director of trading research and education for the Market Gauge Group. Michelle, it's great to have you on the show today. So what do you make of the reaction we've seen from markets so far? I mean, not only did the markets not fall in response to the Fed on Wednesday, but they actually came close to record highs.
Well, coming close is like almost surviving the operation. So even though we're still, I think, in surgery right now, there's still a lot of, I think, people trying to figure out exactly what all of this means. Basically, it looks like what Powell said yesterday, even though he talked about the speed of the taper and he talked about the raise of the rates 2 times. The dot plot actually showed 3 times. He didn't mention that. It seems to me that it really looks like he still believes that inflation is transitory. And if you look through the notes, you really can see now that he's talking about basically a 2.6 PCE rate that will go down to 2% in 2023. So that's personal consumption expenditures. That's transitory in his mind. I think the market didn't necessarily believe it today, and that's why we saw finally some movement in the precious metals. And really, we attempted the new highs, but we've come off. And these sectors that keep really falling are showing no signs of strength here. Retail, small caps in particular. And so I think that's kind of right now, we're still in the digestive mode, and we're definitely in the fog in terms of exactly what central bank policy will be. If they have to get more hawkish, will they?
And to that point, we've heard so much about the possibility of a taper tantrum, as they call it. Investors may have built up trust that Chairman Powell will communicate before he takes action. But is there still concern as central banks continue to admit that their forecasts for the next year were to a certain extent wrong, even though, as you just mentioned, Powell really isn't admitting he's wrong. He's just saying it's temporary. It's just a longer temporary than we thought before.
Well, certainly if he does anything to surprise the market, but he's in a really difficult spot right now because of exactly what we saw in the market action today. 24 hours after the announcement, the market is back to the reality of, gee, although in this case, we also didn't see the growth stocks lead like they've been classically leading lately. So right now, yes, we could potentially still see somewhat of a taper tantrum if the policy changes, but I don't see that happening right now. So I think that the whole market, even though England showed some leadership in terms of raising the rates, we're looking at, he's talking about a 2.5% rate maybe at the end of 2023. If we go into any more inflation, which certainly looks like we will, he's either going to have to get super aggressive and then totally destroy the economy and the market, or sit back and just let inflation get out of control.
Yeah, and it seems like they've kind of sat back and let inflation get out of control a little bit as we're getting to this point. Now, when it does come to those rising prices, there has been a lot of talk about the inflation hedges people are turning to, and of course, whether cryptocurrencies like Bitcoin are a trustworthy choice. Now, it comes as no surprise that major central banks would be against this, but what do you make of the Bank of England specifically telling investors that Bitcoin could become, quote unquote, worthless?
Well, we've heard so much rhetoric from central banks, from governments. There was a story that Russia's going to ban cryptocurrencies, but yet the thing forges on. So obviously, you can't control the cryptocurrency space. That's the whole point. But what we've also learned is that Bitcoin is speculative and does have exposure to what the S&P does. So yesterday, or in the last several days, when the market crashed, so did Bitcoin. When the market started to rally, so did Bitcoin. As today, when the market started to roll over, so did Bitcoin. The question is, at what point does that actually separate? And that's different than blockchain technology, by the way, which looks like that's here to stay. So I think that right now, worthless would be maybe central banks' dream, but certainly not going to be a reality.
Right, and I mean, for one, we could see anything could become worthless, an equity, a currency, any of this can be. So yeah, that's a warning, but it's a reality for almost every investment that you might be making at this time. Now, as we talked about there, we've hit kind of record high after record high in markets since this pandemic began. What happens if that record kind of comes to an end soon? What is the average investor looking at there? And we have about 30 seconds for you.
Well, I think basically what we're already seeing is a lot of movement into the defensive plays like utilities, for example, and consumer staples. And may see more of that. Investors will have to look for places that are immune to pricing power. In other words, they don't have to pass on higher costs to consumers, things that people need. And believe it or not, precious metals, which have been so dormant, could actually finally pick up.
Yeah, it'll certainly be interesting to see where that all goes and if we end up getting some sort of taper tantrum along the way. Michelle Snyder of the Market Gauge Group, thank you so much for your time and insight.
Happy holidays to you.